In the first quarter of 2021, crypto Twitter was flooded by those laser eyes avatars made by users that were highlighting that we are approaching a Bitcoin super bull cycle and also getting past 100k USD in price. Afterwards, the abrupt fall has come and we have slided from over 60k to 30k. And crypto Twitter turned to something like this, the blindfold eyes. Right now, we are experiencing a short pullback from 29k to 32k, but doesn't mean for us investors and traders that we should turn our focus to Bitcoin again, or is it just a trap, the bull trap? Today we'll discuss over a few aspects of the cryptocurrency market and how and where is it going. Welcome to another episode of Block Revision, and let's begin. Now let's get to market mover section and quickly jump through the economic calendar. So on Thursday we had thought about existing home sales in US, and right now on Friday we had important gauge from Great Britain where retail sales month over month turned out to be positive. That looks that the economy is opening up, and people, especially in the UK, have increased the purchases regarding maybe also regarding Euro 2020 Football Championship, but what has fueled also this metrics was automotive fuel that which sales has increased by 2.3% as people has increased the amount of travels. So yeah, that's right now, and will it bring another possibility to talk about the possible hike of interest rates? I don't find it right now, but we'll try to look cautiously through what central banks of Great Britain will say during the next Congress. Very strong data comes from Germany, where on Friday we had market manufacturing PMI flash of over 60 points that has beaten a forecast. And right now Germany's service PMI looks like this. During previous months we've seen a very dynamic jump regarding this metrics, and this reading points that we are experiencing the strongest pace of expansion since where these metrics were first published. And obviously it's everything due to the easing of virus containment measures and growing demand. Finally, also business confidence remaining strong. So the Eurozone is opening in a very, very high pace right now, unless the moods will be spoiled by the Delta variant. And during recording this episode, we are awaiting market composite PMI flash from US. This is also important indicator from US. Now let's get to the economy view. And regarding this topic, I'd like to bring a few headlines that I found this week. That was for me the most important And the first one is that Powell has broad support among top Bidenites for a new Fed term. So it means that in the late summer or fall, we'll find out who will be the new central bank chef, whether Jeremy Powell will be renominated, or rather we have another candidate. So when it comes to Jeremy Powell, Treasury Secretary Janet Yellen tells that she is pleased with how Jeremy has steered monetary policy through the pandemic-induced crisis, and so we can find that there are lots of voices for Jeremy Powell to stay, but as I said, and we'll find out soon. So Powell enjoys broad support in markets and among lawmakers, and is viewed by some inside and many outside and administration as the frontrunner, as a possible head when it comes to re-nomination. So it's worth mentioning that whether it's Jeremy Powell, whether it's maybe another serious candidate that might be Brainard, the trajectory of the policy of Fed might not be changed just because whether it's more dovish or hawkish candidate, just bear in mind that Federal Reserve banks are set up like private corporations, and lots of decisions of the Fed will be probably set by its shareholders, such as specific banks. Now let's talk about Fed balance sheet that has peaked this week, and doesn't mean it will bring inflationary consequences. So let's bring the topic a little bit closer, because bank reserves nearly never get into the real economy, and they just remain on banks' balance sheets. So whenever just a bank is willing to lend those bank reserves, it means it will finally may get to the may speed up the spiraling inflationary consequences. However, most often it shouldn't, so it might not be as alarming as it's is seen on the chart. Right now I have a bit bearish news for the US oil. So OPEC Plus and its allies have reached a deal to raise oil production in response to soaring prices. Right now they are setting a target for the end of 2022 for restoring all the output cut during the early days of the pandemic. So OPEC Plus will pump an extra 400,000 barrels a day each month from August. So to sum up, it's quite now uncertain whether the amount of volume restored by OPEC Plus will be enough to significantly dump prices, because demand for oil is also expected to keep rising. So just remember that maybe this surge of US oil may not be as stable as it was in price in the first quarter of and the first half of this year. The next news for today is from Biden again, that dismisses inflation worries and warning on hiring difficulties. So right now the stand of Biden is same as the Fed's one. So we are still struggling with hiring process, and we need to bring back the job market to the levels as it was before. And Joe Biden says there will be near-term inflation, but most economists believe that it's highly unlikely that it's going to be long-term inflation that's going to get out of hand. So he added, So right now we've seen previous week that the inflation already has got out of control. So I don't know whether Mr. Biden is blind or whether he just don't want to admit certain facts. One of the outcome of ongoing inflation, one of the factor of this, maybe better for assets. So just investors running away from cash and going to whether it's hard assets or ETFs that may boast with beating out mutual funds for inflows in recent years. So right now we can find that investors are much more willing to pay and turn to ETFs rather than mutual funds. It's probably due to this 2008 problem and a mistrust of money managers that has loomed since the financial crisis. So right now we can find the clear tendency that where investors are going, and probably it will not stop anytime soon. ETFs are just cheaper and more affordable for the average investor. And the next one, that is, as Bloomberg has called it, a joke that just got serious, and it's about Jamie Dimon that has been awarded by 1.5 million stock appreciation rights, which are like options and will let him capture profit if the stock price rises in the coming years. So just to explain, this special award reflects the board's desire for Mr. Dimon and to continue to lead the firm for a further significant number of years. And JP Morgan's board said in a regulatory filing Tuesday. So I don't know, but it's quite insane, as some journalists claimed the award is actually pretty rational, but only in an absurd pay climate. So I don't know. I just it's hard to imagine how an extra 50 million bucks could add anything to Demon's motivation. So I don't know what to think about it, but it's really outstanding right now. Now let's get to the index's outlook, and here we can see on SPX index, that is a index of 500 most important US stocks, that we are in this long-lasting uptrend that has had its commence at 30th of October of 2020, and on Monday we had a drop that has stopped. Its lower shadow that is here has stopped at this top of 7th of May, and the bottom of the body of this candlestick has stopped at the top of this formation that has topped 15th on 15th June. So that was a healthy correction, as we may assume, and that may get better balance when it comes to between growth. Boop, boop. So it was a good boop, boop. So it had some chances to be qualified as a healthy correction that may bring better balance for the value and the growth stocks. Here we can find a comparison of Vanguard growth stocks to Vanguard value stocks, and right now this ratio is favoring growth stocks, and we are at 2.15 level. So it means that we are right now in this growth stocks environment, But any single longer correction it may bring this ratio lower. But yesterday, but as of 22nd of July, we can find that this candlestick also just pointing that we are trying to get out of this consolidation and move higher. So it shows the strength of the market. So on the SPX index, it is logical to assume that we are getting to the another buy the dip episode. Those advances on the chart are seen thanks to the robust corporate profits and stimulus support. So after this 3% sell-off on Monday, we can find that we have just closed the gap on Tuesday, and right now traders are buying the dip. However, when it comes to MACD pattern indicator or price indicator, we can find that we are in the sell environment, so this may limit an upside to previous highs for now. So when it comes to robustness of corporate profits, we can see as here on the chart that S&P 500 earnings projections show biggest increase in decades. So it means for us that we are in this environment where, as Bloomberg says, more than 85% of the S&P 500 firms has reported results that have beaten analysts' predictions. So we are in this underappreciated environment where analysts have had to revise their earnings estimates up, and the market is very strong despite the cheap money that are flooding the market. And as we can see, the earnings of the most important for the US stock market companies are rising. So it's a bullish scenario for the markets. And in the meantime, Dow Jones Industrial Average Index is probably negating a head and shoulders pattern that shows a strength of the market and a high possibility of going upside. Now let's get to the crypto outlook, and here we can find Bloomberg has published an article that Bitcoin rally finding support with this key indicator. What this indicator really is, due to Bloomberg findings, this indicator is 55-week average. But I find it's so rarely used, this 55-week average, that I would rather say it's rather an incidence than the coincidence regarding of what a touch of this moving average may bring to Bitcoin next. So I find it's quite out of importance regarding we are approaching this line, as it has just 3 times confirmed its usability. This indicator has proved 3 times in the past its usability, and right now we can find that maybe it will bring us a move, but it's not very important indicator at all. So I wouldn't listen to Bloomberg in this case. But another more important indicator when it comes to foretell the future performance of Bitcoin might be estimated leverage ratio, and that is a ratio that is measured by open interest divided by exchange reserve, and high ratio means traders taking risks with highly leveraged positions. So in the past we have few times that this high leveraged ratio turned out to be foretelling the future price turn. So we can find here in the March of 2020 we were in the nearly highest level. Afterwards, in the middle of July of 2020, also we at that time have experienced a sharp move, and afterwards, when touching 20,000 bucks, we have also made a sharper move. So the recent one, such period was in the end of April of 2021, before this abrupt slide, and we may repeat similar scenario this time, but the price action may be quite opposite, in the opposite direction than it was in the April, as often the highly leveraged ratio of investors find that the price is turning another direction that they are betting. Another signal that tells us that bears are probably trying to dominate the market right now is put to call ratio. Right now we are at 0.81 ratio level when it comes to call to put. So it means that 0.81 reading reflects a smaller amount of neutral to bullish call options for the July 23rd expiry, and we can find out that often market is surprising the majority of investors and traders. So we can find out that bears might have set themselves a trap, because 96%, as Cointelegraph says, 96% of positions in put options used 32,000 bucks or lower strike prices. Now let's find out what's in the trade idea section. Let's recap our previous propositions of trades. So one of them was Ethereum to US dollar, as I presented in one of the episodes of the previous week. After touching this line that I mentioned and appointed, this was a perfect entrance, a perfect area of possible taking a trade, and as I have mentioned, the very important area to rebound for Ethereum in this case was 2100 level, and it happened perfectly. So the first trade has worked out. And what about the next one? Next one was uranium, and I've just suggested that the perfect time to make a trade was this area of 20 US dollars. And after this trade, we have had about 1 day that the price has stayed in the same area. However, on the end of the week, we have slided for about 6%, and afterwards just to get to the lower level than even expected, below 18.8. So hopefully you have enjoyed and probably used it for your profit.